Hello viewers, welcome to IAQS's second video podcast. Here we ask our students to study certain sectors and understand the impact because of the overall COVID-19 situation, which is then discussed with our industry experts. The topic for today's podcast is impact of COVID-19 on the non-life insurance industry. There is a lot of information available in the online, but it's really difficult to have an actual perspective to it. Today, we have two non-life insurance industry experts to help understand the situation critically. We have Mr. Gagan Sawhney from Delhi. He's an associate actuary from Society of Actuaries, US, a qualified PNC underwriter, and a credentialed risk manager. He has over 7 years of experience at Excel Catlin, where he was associated with reserving, solvency, and pricing of insurance products. Thank you so much for accepting our invitation to this podcast, sir. Okay. Along with him, we have Mr. Akash Rughani, the Program Director at Institute of Actuarial and Quantitative Studies. He is a practicing chartered accountant, an actuarial mentor for over 8 years, and a consultant to various general insurance companies. A warm welcome to you, sir. Thank you. Also, we have our student Keshav, who will take this opportunity to ask a few questions. So I hope everything is a bit in control in Delhi as well, Gagan sir.
Yeah, Delhi is very much locked down. I mean, there are barriers, not exactly outside my place. If I go out a few meters, so it's pretty much deserted, and cases are being discovered. So we are, under strict lockdown. We can't go out even in parks.
How do you feel that this overall coronavirus will impact the non-life insurance as an industry?
I mean, as an industry, I think there have been few researches on this. So they have, divided the impact as to one would be the direct impact of COVID-19 and the other would be the indirect impact. As far as direct impact is concerned, because the economic activity has slowed down, right? As we have seen that every business has shut down. So in the short run, the business will contract. That's what the projection is, as we can see from the, some past comparable events, that in the short run, the business contracts. But in the long run, I think people will have more insurance and would like to include events like this in part of their coverage. So insurance companies will develop products in long term which will cover events like this. If it's insurable, otherwise government will step up and form their own insurance programs like they have done for flood in US and terrorism in US, because private industry thinks that these events are not insurable. And as far as indirect, that was the indirect impact. And direct impact, there is going to be a lot of fight over claims, which claims are covered, which claims are not covered. There could be a lot of losses in the short run for some of the PNC insurance companies. Yes.
To add to what Gagan has said, typically insurance is a business of risk, and always a business of risks prospers in times of crisis. So post the crisis, because it creates a change in mindset. People tend to rush to cover such things in the future. So yeah, in the long run, as Gagan pointed out, there will be a need for such products to come. In the short run, like every industry, insurance is a derived industry as such, and hence will suffer impacts.
Okay, sir. Thank you for that kickstart. So I'll have my first question for you, Akash, sir. Sir, I was going through a motor insurance, though there would be a lack of car sales in the country and virtually zero travel in the country for the lockdown period, that is for the 21 days. There would be quite minuscule number of claims occurring because of the accidents. So do you think this would help to cope up with some of the losses highlighted earlier for the insurance companies?
Yeah, I mean, this is a theory that's going the rounds, which is, let's say, partially true, because what will happen is there will be obviously less number of cars on the roads and hence virtually lesser amount of claims. If you understand the motor insurance or any insurance business, you also have premiums. So on the whole, the premiums will also be impacted because your car sales are down. Virtually, car sales are down. They are zero actually. So that will impact the top line. Yeah, the bottom line, car insurance or motor insurance per se would benefit a little because yeah, the number of claims in terms of accidents may be down. But once things open up, and let's say if there is a claim, what will happen is there might be a fringe cost in terms of labor for parts going up, parts cost going up because they are not available. So let's say there is an accident that has happened of a Toyota Corolla, but Corolla का part नहीं है, या फिर there is someone who's not available for the labor, may result in a little higher claims once things open up till normalcy is achieved. But on the whole, yeah, there is a benefit to the motor insurance company in terms of lesser number of claims, but there is also a hit in terms of no car sales.
Thank you, sir. Gagan, sir, I have this question for you. That I've seen some of the insurance companies have come up with the COVID-19 insurance. So how does
Right.
one price such a product? I mean, a pandemic insurance where no data is available, no past trends, nothing at all. So how do you price such a stuff?
Okay, so I was discussing this with Devarshi. So yeah, I think he told me that insurance companies are offering lump sum benefits, right,
Okay.
for this. Now you say the data is not available. Data is available, but it is changing very rapidly at the moment. New cases are being developed, and every day the data changes. So it's not very reliable at the moment because, except for China, the outbreak has not stabilized in any of the countries. So we don't know how much it spreads and how much casualties there will be. But data is available, so it's not very difficult to calculate, the probability that you will be affected by COVID-19 or not. There are many models which are projecting this from various medical research. So, and you can also compare this pandemic from the past pandemics, right? Like in the past, there was Spanish flu in 1918 and many other such pandemics. So we can compare that and see how much percentage of the population was affected. So insurance companies could use data. I mean, they could use the worst case like Italy or Spain and price the products accordingly in India, deriving how much is the chance that you will get affected by COVID-19.
So just to add to what Gagan said, Keshav,
Sir.
COVID, so if you understand health insurance covers hospitalization. So I think IRDAI has come out with circulars and has clearly told that if you get hospitalized in event of COVID, the claim is covered. So whatever you spend at a hospital in terms of testing, whatever have you spent, what is covered. Now, I was just going through a couple of COVID insurance products. So one I went through was of ICICI Lombard, and the other I went through was of, I think, ACCO. Now, Lombard has, as Gagan pointed out, made a benefit-based product. So basically meaning, let's say you get COVID for the period of 10 to 15 days, you may not be able to go to office. If you're a business guy, you will may not be able to go to your business and incur a loss. Accordingly, you can choose a sum insured. So let's say if you get that COVID, you will be paid the sum insured of 1 lakh, 2 lakh, 3 lakh. It's up to you. How do you want to buy it? This is of Lombard. What ACCO did was a sandbox. So it was a testing product. So it was a very, very small product which they tried out and tried to understand COVID and do it. And I think they've stopped it now because a sandbox can go up to 50 lakhs or 1 crore in terms of maximum premium. So that's stopped right now. But way you price it, I think you have a number of models, as Gagan pointed out, which tell you how the virus develops. And based on that, pricings have been done. I don't know if there is reinsurance support or all those backend infrastructure has been ready or not, but attempts have been made right now, and these are very nascent stages, and the data is developing quite rapidly.
So these data are what we know about the history, that for the past 4 centuries, we've been during the 1720s, 1820s, 1920s. So we have had certain pandemics, the 4 pandemics earlier. So do those pandemics also affect the pricing of the current pandemic that is going on? The Spanish flu, the uh,
So
pneumonia.
every
Asian flu.
oh, sorry, Gagan, you can take it.
So I mean, in the past, the insurance was not. So the last pandemic was a Asian flu. It affected only 2 million people, right?
Okay.
And that was in 1957. Hong Kong flu affected around about 1 million people in 1968. So SARS, which was in 2002, 2004, only affected less than 1,000 people. H1N1, it affected like 151,000 people. So we haven't seen a pandemic of this scale so much. And in the past, the insurance was not so much developed. If you compare it with Spanish flu, which we can compare with because 100 million people were affected. But to answer your question, whether that will affect the pricing, I mean, the pricing will be developed on the data available and the models they have to project the outbreak of COVID-19, how it will
Okay.
affect communities.
Thank you, sir.
Okay.
The next question of that is the industries across the globe are closed because of the government orders. Most of the industries are closed. So the amount of losses these industries are incurring are humongous. So
Yes.
to cover these losses, most of the industries, what they do is they buy a business interruption insurance product and to speculate the halts occurring in the business. So what might be the expected rise in claim in such products, or rather loss incurred in such cases? And does India have such products, the interruption products?
Okay. First, India doesn't have such products. We don't have those business interruption products which are there in, US primarily, in Europe as well, but US has most insurance in the world. So US has those products. We don't. But there is there are some details from US as well. The pandemics are not covered in business interruption insurance. So it's only
Okay.
extreme events, extreme weather, earthquake, and fire. These are the three covered events for business interruption insurance. Disease is generally excluded. So now there are some, legislatures or regulators who are trying to get this included. But this will not be easy. Insurance companies will, gang up, and there will be some long legal battles between regulators and the insurance companies. But I don't think this will get included very easily because it will have a lot of effects, a lot of bad effects for companies, insurance companies in the US. So, and what was your other question?
The expected rise in claims or the loss incurred.
So, yeah, so claims will rise definitely for business interruption insurance. There will be a lot of claims, but all of these claims will be fighted, in court. They will all be legal costs for the insurers will go up humongously. Because if they
Okay.
accept one claim, then they have to accept all the claims. And if
Yeah.
they win a battle for one claim, then all the claims are rejected. So it's going to be a legal battle for these claims more than anything.
Okay.
Yeah,
So
so
can these? Sorry, Akash,
uh,
please go.
yeah, echoing to what Gagan said, there is no insurance in India right now
Okay.
covering a pandemic. The only thing I think where there might be claims would be event insurances. So I was going
Yeah.
through an article, I don't know if it's true or not, of Wimbledon paying 2 million per year for an event insurance for the last 17 years. And now
Tokyo,
since Wimbledon is not happening, they
yeah,
got put
even
one.
Yes,
Tokyo.
It's a
I also read the
I
same
read it, but I
article.
don't know if it's true or not.
No, I
I
mean,
also
this is
know somewhere.
even. Tokyo Olympics were insured for $800 million. So these claims will come. Insurance companies will have to bear it, but it's nothing compared to the actual losses which has happened to the governments and the promoters of big events.
So there will be claims for event insurance, Keshav, but apart from that,
Yes.
as Gagan pointed out, it is a long-drawn legal battle.
Okay. So apart from the premiums that these companies are generating, the companies also generate the income from investments. And because of the pandemic, many believe that we might enter a state of recession if this continues, if the pandemic stays in the world for a longer period of time. Due to this, there might be a severe fall in the company's income. What the companies might have projected back might not work at all in the current situation. So what do you think would be the investment loss?
And so I should take the question. So I think yes, investment losses in equity markets will be significant because as we can see that equity markets have fallen down, but the government they're trying to provide stimulus packages so that the equity markets remain at sane levels. In the short term, yes, you will see fall in investment income for insurance companies. Now, I have not seen the asset breakdown of Indian insurance companies, but internationally, the biggest investment is bonds for insurance companies because regulators they don't allow insurance companies to invest heavily in equity markets. They are deemed risky. In India, they don't provide the details of their, I mean, not for the public. They don't disclose how much is invested in equity, how much is invested in bonds. But yes, in equity markets, they will lose money, insurance companies. Even in bond markets, as businesses close down, corporate, corporate debt will default. Default rates will go up. So yeah, this would be some area of concern for insurance companies.
Now I
Akash, sir,
have a
would you
question
like to
for
add?
you.
I think Gagan's put the nail on the head. There is nothing. It's even in India, very few amount is invested in equities or any other form of asset class. They will suffer losses there. Bonds, conservatively safe investments apart from corporate bonds. The investment book, yeah, in the short run will undergo a loss, but all of these insurance companies would be having a good float in terms of the premium money that is keeping on flowing on. So as of now, it doesn't seem that there will be a very huge claim at an industry level throughout, which will, let's say, give a test of insurer solvency. So they will be having a good float to maintain. They will incur losses on the investment book if they have a high exposure to equity or whatever exposure to equity they have.
Interesting.
Thank you, sir. Moving forward, I have a question for you, Akash, sir. Due to the COVID-19 lockdown, many customers, many people are facing short-term cash crunches. So keeping this in mind, what RBI has done, they've taken a decision to defer 3 months EMI payments. Should the insurers regulator, IRDAI, consider giving general insurers a grace period for payment of renewal premiums on existing policies and keep the existing policies cover live during the grace period for the payment of renewal premium? So what are your views on this particular thing?
I think IRDA has already come up with an extension. So let's say if your policy was maturing from the 25th March to the 31st of March, a grace period of 21 days. I think 21st April is the date that they have given. But this is only for health insurance and motor TP, which is motor third party insurance. So let's say if my motor insurance is coming for renewal on the 26th of March, due to the reasons of COVID, I don't have sufficient cash. I can pay it up to 21st of April. It will not be counted as a default. There is one more relaxation that has come in terms of other insurance policies, is something which is called as break-in. So typically, let's say if there is a car insurance which is expiring today and you don't renew it, and you renew it after 10 days. So what happens is you lose out on your NCB. And also there is an inspection of your car done. IRDAI said you relax that 30 days of window has been provided, that if he renews within 30 days, allow him the NCB benefit, allow him the break-in, don't do the break-in inspection. So those two uh, uh, regulations have come from the IRDA. Even in the life insurance space, a 1 month grace, or I think 1 or 2 months grace has been allowed even in the life insurance space.
Okay.
So yeah,
So now,
just to, I think these relaxations have been given globally. I mean, if you look, even China, US, Hong Kong, everybody has given these relaxations. And yeah, it's across all insurance products that policies are not getting cancelled because of non-payment of renewal payment at the time.
okay. So now I have a last question for you, Gagan sir. In the wake of the virus, what some regulators like the New York Department of Financial Services have done is that they've come out with a circular letter for insurers to disclose all the disruptions in their operations and to provide all the impact of the virus on their businesses. In extension to the prior, so has India also come up with any such circulars or any such press releases? If yes, then how is it going to help the companies? And if no, should the regulators come out with such a thing? And is it really worth it?
Okay, so it's a, there are 2-3 questions in this. First, the circular. The circular is from New York Department of Financial Services. So what they have done is they've asked all the insurers who are operating in the state of New York to first to disclose whether they are offering business interruption insurance or not. And if they say they are not offering this product, then they have to certify this from an insurance regulator or someone. So India currently doesn't have this insurance. We don't have business interruption insurance. So, okay. Second, what they have done is they've asked the insurance companies to send communication to the insureds who are small businesses to explain the coverage they already have. So the primary reason the regulator has done this to minimize the number of legal claims which they will face. So they want the insurers to explain to their customers that whether you have this COVID-19 insurance or not, whether you will get the benefits or not. So it is mostly a legal thing which has been done to minimize the number of legal complaints because they have to resolve it after this. So yeah, but there are talks going on whether to include this COVID-19 into the current business interruption insurance or not. I don't know what will happen for sure, but I think it's the government which will have to pay, or probably government and insurance companies will share the burden. But nobody could bear all the burden. That's the.
Well, and this was quite an insightful podcast, and I'm pretty sure that today what we got to learn was beyond the scope of the internet. What information, what expertise that you provided us was really great. And of course, those who watch the interview or this podcast later will also draw their dots between the COVID-19, the insurance industry, and the economy at a larger picture. So thank you so much, both of you, sir.
You're welcome.
Thank you.
Thank you.